Hello and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Shrikant joining you from India Startup Capital, Bangalore, and we have a power-packed show lined up for you over the next 20 minutes.
And I'm Krishna Kumar coming to you live from ET Now's Mumbai studios. First up, I check on all the headlines here at ET Now Startup Central. We kick off the show today with Vijay Shekhar Sharma, founder and CEO of Paytm, on its investor and financials record fundraise, the big e-commerce fight for dominance, and who the last man standing will be. Veteran investor Sudhir Sethi, founder of IDG Ventures, which counts Myntra and FirstCry among its portfolio companies, talks about the areas that IDG is looking to invest in the near term and Amazon's fight for the top slot in India. And our second venture capitalist on the show, Sama Capital's managing partner Suresh Shanmugam, who talks about their investments including Paytm and Snapdeal. Facebook shatters Wall Street with its first quarter scorecard. The social networking giant reports a record profit of $1.5 billion, 3 times that of what it made a year ago. Sales surged 52% as advertising revenues skyrocket. The company also issues a new class of C shares to ensure Zuckerberg retains control of the company despite him giving all his shares to charity. So those were the headlines. Over to you, Chandra, in Bengaluru.
That's right, Krishna. We've been at VC Circle's Tech Circle event pretty much the whole day, and we are going to get you a lot of interviews that we did out of this event, and we really kick it off with Paytm's Vijay Shekhar Sharma. Now, he's speaking for the first time after its investor and financial raised a record $4.5 billion, valuing itself at $60 billion. What that fundraise means for Paytm's future. He's also spoken about the big war happening in e-commerce and Amazon's fight for dominance. Let's listen in.
I think we were not worrying about funding tap by the virtue of the money that we had in the bank, and we had money from Alibaba and Ant both combined, and I think this round is a statement of acknowledgement of the business model that we are pursuing, which is at a very massive level Ant is pursuing in China. I think I look at this round as a validation of the business model that we are doing at scale, what it can be and how valuable can it be.
There were reports that you're looking to raise $400 million for your payment bank, which is going to kick off in August. What's the update on that front? And
like I said a while back, we have enough cash in the bank. We continue to get internal incoming requests of investments, but we don't all the time take calls on those investments. 400 million was not even an offer on the table, by the way, or not need in the table. We have 400 million cash in bank anyways.
And the glamour quotient has sort of gone off from marketplaces this year. People are talking about how Amazon is basically snipping at everyone's heels. They expect them to overtake Flipkart, and today there are reports that they've overtaken Snapdeal. Where does that really leave you? Because you also have a marketplace, though it's a use case for Paytm. But where does this really leave Indian marketplaces? Because everybody keeps saying it's a winner takes all, and we are sort of seeing that happening.
I think, first of all, on behalf of Paytm business model, there is a very clear articulation that we are a payment company becoming a financial services company. My fundamental belief is that you can't beat Amazon in Amazon's business model. That's for sure. And that is why when we were building marketplace, we were clear there's a clean, clear marketplace, and Amazon business model does have a marketplace piece. So not to say that that is not a marketplace, but my point is that we were a long tail focused marketplace, and we are one. Commerce business will be built in next 5 years from now on, because it has got decided this country will have commerce. Everybody who's reached till today is a reason that this country will have commerce.
What other plans do you really have over the next few months? The projects, the pet projects that you really want?
So as a Paytm, 3 business models: payments, financial services, and O2O commerce. We've been talking about them since last year. This remains focus area. In fact, the marketplace of ours also works in an O2O model. So when you buy an appliance, it is served from a local shopkeeper. And these payments remains the dominating space. We want to continue to become, this year, we want to become bigger than Master, Visa, Amex combined in this country. And not in online space, but in an offline space. So we have a very daunting task there. And then thanks to the lot of payment bank business model that is coming there, so financial services business model will kick off more publicly there.
How has life changed for you in the light of the recent FDI norms, or has nothing changed? Have you had to review prices or put in place a system where the 25% rule kicks in? Any changes that you've had to implement?
We releasing an app rollout where the merchant's name comes up on the product page also now. That's it. And then little more details show up. Everything else remains the same.
Right.
But I think that something good has happened because of that market is no more discounting, so our number of orders and GMV is growing. So we are happy about it, what happened.
Okay, finally, if you just have to crystal gaze the marketplace, is it going to be Amazon versus Alibaba? And if it's Amazon versus Alibaba in what way? Direct entry through Flipkart, through Paytm?
That question is for Hongju, how Alibaba comes. But I think I know one thing for sure. As far as in a way proxy inventory, I don't know how to say, because India doesn't have a technically inventory-led business model left anymore. So that business model is traditionally known for Flipkart and Amazon to play for. And I think that's a race that is clearly running there. Whether they will, which one will win, I think I'm a champion of India, so I'll say Flipkart should.
A very candid Paytm's Vijay Shekhar Sharma over there in conversation with Chandra Shrikant. Now, moving on, we have two venture capitalists on the show today. And so we kick things off with veteran investor Sudhir Sethi, founder of IDG Ventures, which counts Myntra and FirstCry among its portfolio companies. We asked him the areas that IDG is looking to invest in the near term and Amazon's fight for the top slot in India. Take a look at what he had to say.
We deploy about 200 crores a year. In the last 3 years, that's been what we've been deploying. So it's not gone up, it's not gone down. We believe in India in the long term. Our portfolio is now about 50 to 53 companies. We typically come in very early. So some of the companies which have done nicely, of course, and is Lenskart, FirstCry, Myntra, as you know, we sold to Flipkart. Zivame on the consumer side, on the software side, Manthan, NewGen, Unboxed, Fintelix, and then we've done a lot in the healthcare side. I think our view about India is there is a lot of innovation. There is a lot of, we are looking at 5 to 550 companies a quarter right now.
Right.
And that has not gone down, it's going up. So there is a groundswell of innovation, and our job is to hopefully choose the right founders at an early stage with a unique product, a unique business model which works in a large growing market, has differentiation, in some cases patentable.
People are now talking about unit economics and about how, we've come at a stage where growth can't be the only answer. So what is your own take on
I think
that?
the answer is very simple. When we were in Myntra was working on unit economics when Jabong was going all over in terms of discounting. Myntra was working on unit economics. So all our companies have and continue to work on improvement on unit economics. There's no question about it. Even the younger ones, Popixo, recent investment for, it's a targeted platform for women. About 3 million women come on the platform every month. Largest in the country so far, has good unit economics.
Right.
Tripoto in the travel space, and I can list down so many of them. So I think this whole issue of, unit economics being discovered afresh is a myth. All investors, including ourselves, do believe unit economics have to be properly done.
And is 2016 really going to be the year of consolidation where a lot of people expect, Amazon, today there are reports that it's gone past Snapdeal and that it will go past Flipkart. So what is your own take on that? Is Amazon's focus, long-term customer focus, and the fact that they don't have to go out and raise funds really helping them in the current environment?
So Amazon is a serious player, there's no doubt. How they pan out vis-a-vis the other players is a different matter altogether. There's a 10 times overall growth in the market space in the next 10 years overall. And unit economics have to get better overall. So I think that space is very interesting. It's not a space for weak-hearted new players.
Said we have two venture capitalists on the show today. After IDG, the other one we have is Sama Capital's Suresh Shanmugam. Now, Sama Capital is a small fund. It has a relatively smaller corpus compared to other venture capital funds, but it owns stakes in some of India's unicorns, including the likes of Paytm and Snapdeal. We spoke to Sama Capital to really find out about the areas that they will be investing in going forward.
In terms of trends, I mean, I think there certainly is caution in consumer net, driven by some of the funding shortfalls for the larger companies. That's trickling down, and everybody is kind of feeling the pain, if you will, of a few companies being highlighted that have significant capital requirements and capital becoming tight. At the earlier stages, you do have companies that are building and growing, and I think we'll be more cautious about the capital requirements and how long they make their capital last.
Which areas are you going to invest in, in the near term, and are there segments that you will consciously stay out of for some time?
No, I think for us, we've always been sector agnostic. So for us, we look across the spectrum and are quite open on the categories we'll invest in. I don't know whether there's anything we would completely rule out. It really depends on the quality of the team and the opportunity, and whether we feel it's a good investment for our investors or not.
Right. We've recently seen markdowns at Flipkart by, two mutual funds, and there are reports today that Amazon's perhaps overtaken Snapdeal in India. Do you think Amazon's much better placed because they don't have to worry about raising capital? And is 2016 really going to be the year when we are going to see that inevitable consolidation happening as far as marketplaces are concerned?
There certainly is the opportunity for that consolidation. As and when these companies need more capital, and the sources of capital will have a much more significant say in how the industry gets structured over time and who they ultimately back. Because this is not an industry or a segment of the industry that will be driven by the venture capitalists anymore. It's the larger players, the strategic investors that are going to have a much more significant stake because they have the ability to write the large checks. So from my perspective, you will see, whether it's consolidation or not, you will certainly see significant changes in 2016 on the consumer internet.
Can Indian marketplaces really hold their own in such an environment?
I mean, in the end, they do have the local market knowledge, which I think is certainly beneficial.
Recently, VCs have been in focus in India also because of what happened at Sequoia. As someone from the community, what is your own take on this? Because we've heard a lot of VCs, criticize the government's move, saying that it might vitiate the investment climate. What is your own take on?
If there is, you're operating in a manner where you feel good about your diligence, that there's no red flags, then why should your approach change?
Right. And you were in the process of closing your recent fund. Has that been done, and will you be investing more from that going forward? So
we've had a close on our third fund, and we're investing out of that now.
So two venture capitalists done, Chandra. Let's move on to the other big story that we're tracking over here. Facebook, which blew away Wall Street with its quarterly earnings. The social networking giant reported a record profit of $1.5 billion for the quarter, 3 times of what it made in the year-ago quarter. Sales surged 52% to come in at over $5 billion as advertising revenues peaked. Those impressive numbers sent the stock surging over 8% on Wall Street, and there were still a few surprises left. The company also announced a new class of shares called C shares. If the board's proposal is approved, each shareholder will get 2 C-class shares for every A and B class of shares they hold. This move will ensure that their founder, Mark Zuckerberg, will still control the company despite pledging almost all of his shares to charity. And Amazon's first quarter results are likely to recall the themes of previous quarters, including the march of Prime and its cloud services business. Amazon Prime has about 54 million members in the United States and about 47% of all US Amazon customers, according to Chicago-based consumer intelligence research partners. Now, the e-commerce giant is expected to earn 58 cents per share in the first quarter, swinging to a profit from a 12-cent loss last year. Revenue is projected to climb 23% to $27.9 billion.
That brings us then to Number Crunch, Krishna, the final segment for today. And keeping with the US tech theme, we spoke about Amazon, we spoke about Facebook, and now we're going to talk about Twitter. Because the number we are tracking for you today is 347,222. 3,47,222. That's the number of tweets per minute recorded in 2016, according to a study by consulting firm Accelercom. Now, on the face of it, Twitter should really be happy by this activity on its platform. But going by the dismal results they reported this week, it looks like their monetization is still not working as well as Facebook and Google, because people still find Twitter a very intimidating platform which gets crowded with tweets. So where is the visibility there for brands? So Krishna, I guess, even with so many tweets and so much of action and so much of celebrity and political commentary happening on Twitter, how it's going to really monetize and find a good revenue model, the question is still out on that.
Oh, absolutely, Chandra. Not just monetization. Monetization obviously is a big business problem, but more in terms of relevance as a social networking platform. With the kind of growth that the competitors are putting up, be it Instagram or MySpace, or globally speaking, Instagram is the fastest growing platform at this point in time as far as social networking is concerned. So 347,222, it is a big number as far as tweets are concerned. Keep in mind, Twitter has been around for a long time, so it deserves to put up that kind of numbers and the kind of traction that Twitter has witnessed from its early days. And you're absolutely right. As far as the traction now is concerned, growth is concerned, big concerns for Twitter. It's like those birds that were just flying out of that graphic plate. The number of people moving on to other social networking platforms is only going up by the day. And with the kind of management problems that Twitter has seen, well, I'm afraid it's going to be an uphill climb or an uphill fly for those Twitter birds. But on that note, we need to wrap things up here on this edition of ET Now, Startup Central. Thank you so much for watching, but don't go anywhere. Keep watching ET Now. Coming up next is Market Watch.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.